Good morning, everyone. Welcome to our Friday morning trading session. The market's just opened up, and it's almost like a bad April Fool's joke where we've seen a rather substantial decline. It doesn't look like very much here, but prices did fall off sharply from where they left off yesterday. Yesterday's close somewhere around the 44.80 mark. The overnight a little bit on the quiet side until about an hour before the market opened, and we took a serious dip here to the downside. So we've got a good 30 points gap above the market. This, of course, on the NASDAQ. Crude oil also opening considerably lower, opening under $37 a barrel for May crude. And gold also on the slide, which is a little bit unusual, given that all three markets should be retreating like that. We're getting an early little signal here on the Raptor, which I might look to buy in on. So there we go. I was going to say, where's my signal? This is a soft edge buy signal here on the Raptor now. And I guess I'd better get a stop enabled. This is very early, of course. This is kind of like my way of testing the waters. It's difficult to tell at this point whether this is going to develop into a full-on reversal to try to get into that gap, or if this is rather just going to be a little bit more of a bear flag type arrangement, where the market continues to retreat sideways or slightly higher before once again reversing and heading lower. I don't think there's any denying that the current move puts a much more bearish bias on the market. Yeah, Tony says it was the non-farm payroll report that put the nicks in the wrinkle, as my wife likes to say. Let me show you something here, though, on a daily chart. Here's a daily NASDAQ chart that I just built. And, well, it's not quite as obvious on the NQ. Maybe we'll go here to the E-mini. These markets all do tend to move more or less together, so let me throw an E-mini chart up there, and what I'm going to do is just hold my stop back down here. I don't want Trade Manager rolling my stops just yet. All right, what did I do with my NQ chart? There it is, E-mini. Okay. You know, it doesn't hurt to look at a longer term chart from time to time. And this is what I want to point out to you. If you shoot a trend line across the E-mini, look at that. Is it a real big surprise that the market is starting to reverse? No, not really. It's not that the market respects trend lines all the time. You know, had you drawn a trend line across here, say, and you had this little bit of a channel going, and the market gets down here, notice how traders were trying to buy it up in anticipation that the market would move back to the top end of this trading range, and instead, the market just collapsed below the lows. So it's not that the trend lines are always going to be effective. However, it is useful to know where they are, because you're going to have traders buying and selling accordingly. You know that even if the market doesn't go into a full-blown reversal here, there is going to be some active selling that's going on near that trend line. So that's just something I wanted to bring to your attention. Not a bad idea to consult a longer-term chart from time to time. All right, so here we're coming out with a hard edge bounce now. actually a double pullback, which is a good quality signal. Let's see what's going on here on the Eagle. The Hawk is just a mess this morning. We're going to get stopped here on the Raptor trade, which means I'm going to give the Eagle a chance. Or will I? You know what? I think I was just a little bit too quick there. A little bit unfortunate with the way the trade was setting up. Let's see how this reacts here. So the market did dip low enough to hit my stop, unfortunately. But I'm not so sure I was really on the wrong side of that trade. Notice the reaction here once again to the lows. Gold putting in a little bit of a rally. Here I'm a little bit late getting here, but here's a first micro macro cross higher on gold. Can I cover it all the way down there? No, I can't. Let's try setting it up a little bit tighter like this. And see here in gold, we've got a double bottom or a retest of the lows, however you want to take a look at this. We've got a breach of a swing high. So here's move number one. There may be a retracement coming in through here, which is why I'm trying to run my stop relatively deep, but there's a good chance we're going to see another move higher. So that's looking like a semi-promising trade in gold right now. Let's get back here to the NQ. Which is, yeah, see, there's our soft edge buy. I was looking for this. I shouldn't have gone over to gold. We'll get another signal here in a moment. Again, we've breached the high. We're looking for an opportunity now. On that gold trade, I'm going to try to run it out. So I'm actually going to delete my profit objectives and see if we can't get a little bit more out of that trade. Here's the first micro macro cross now in the NQ. Can I get more than one position going here? Yes, I can. And again, we're just kind of feeling the market out. It is still very early. I know I'm getting a little bit more aggressive than I usually am. So I just managed to get a single in here, so I'm going to let it run out as well. I'll delete my break-even trigger. And we're going to get a possible trend change signal here on the Falcon. And I'm also looking for my cloud crossover signal here on the Raptor. So starting with a little bit of a rule of three type signal here on the eagle, maybe. Coming back with a green bar sell. Not liking the sideways drift very much. If the buyers are going to get serious here, they better start digging in soon, or it's going to be a sideways kind of day. Doggone it. So here they come now with a red bar buy signal here on the hawk. So we're getting a red bar buy. That's a good entry because here on the hawk, well, this may turn out to be the test of the extreme, but there's a pretty good chance that as the market has drifted back into this, what appears to be a sideways range, we're looking for the buyers to recover, right? So this is a reasonable point where we might anticipate the buyers to begin buying. If they don't, well, then we are likely going to become stuck in a sideways trading range. The gold hawk trade just found our high probability scalp target. If you were looking to scalp there, like I said, I'm trying to run it out. Here on our NQ hawk trade, I think it's probably time to start bringing stops in at least a little bit. If it fails at this point and starts to head lower, it is likely that the market is just going to unravel and head to the downside. Here on the Raptor, we're producing another soft edge buy. This one's a little bit more protracted. Normally with the soft edge buy, we like to see it develop a little faster. You know, the little retest. Here's the little up, down, up pattern. This would have been an attractive buy signal, even though it didn't go anywhere. That's normally the look we're looking for. We're not usually looking for a more extended one. Now, having said that, I will look at placing an order above the high of this current bar. All right, I guess I better get a stop and order in play here. All right, so there's my safety net. If we can get above this little swing high around the 44.54 mark, there's a chance we're going to see it run out a little bit. Maybe not a full move into the gap, but I certainly can't be the only one looking for a larger retracement here. Okay, so that red bar buy signal had no problem finding its profit objective. We came back with another first micro macro cross right here, more or less. Sorry, let me expand this. So the red bar buy signal rallied up, hit its profit objective. Here's another first micro macro cross signal, and you're looking at that saying, how can that be another first micro macro cross? Well, remember what the first micro macro cross signifies. It shows you a market that is out of sync and then it goes into sync. So we've had the bars all out of sync regarding bar color. We've had trend lines out of sync. We had the filter go out of sync, and now we've had everything come back into sync. Not liking the sideways drift. More yellow bars. Here's an opportunity that you could choose to roll your stop below this swing. I'm going to hold mine right here where it is until we get up here a little ways and hopefully take out the high. There we go. Okay, so now I'm going to become a little bit more aggressive with my stop. Maybe bring it in right there. After which I'm going to go with probably the ATR stop. All right, so hopefully we can ride out that little swing. Time to take a look here at the support and resistance suite. So we could get a little bit of static here around the 44.60 mark. After that, we're up here to around the 44.68, 69 region. That's very likely going to put, pardon me, the brakes on this move if, in fact, if the market does rally into here, as that would pretty much fill in the gap from this morning or the overnight. Here on the Raptor, I think what I'm going to do is disable the break-even trigger, just because the market is still in a transitory state. And once we hit the profit objective, I'll be more inclined to adopt a more aggressive stop strategy. Maybe once again I'll go with the ATR. All right, so I'm going to enable the ATR strategy. And same thing here on the Hawk. And might as well roll that to break even. Okay, so now here we are. We're playing on their dime. Okay, good little rally. So we're now to the median line here on the Falcon. And if we can get above that, the next stop should be the 44.68, 44.70 region. Come on. Don't stop now. And then as we do get closer to the 44.70 mark, I'll probably go with something more aggressive still, maybe like parabolics. And, you know, at the end of the day, you can always let your account be your guide. There's about $150 in open profit sitting there. All you have to do is hit the close button. And here on the have the same type scenario. So it looks like we've got our entry more or less the same place on our two signals. So working on a possible trend change now on the Eagle. Getting a little bit of static here on the Falcon. Come on, keep going. Working a possible 4-arrow consolidation here in the Hawk, you'll notice that we've got a little bit of a bull flag type transition. Good question here from Marlene. Marlene asks, is a soft edge bounce on the Raptor anywhere inside the cloud? Yeah, short answer. So let's take a look here. Oh, sorry, let me delete that. Let me keep that. Hold on a second here. I don't want to mess up my trade. Okay, I do have an active stop. Good. So the soft edge bounce is a reversal signal. It tends to develop when your clouds on your Raptor become quite broad. So when you get a really wide cloud like this, what this is actually showing you is a market that is very oversold. In fact, here, just one second. What we'll do is we'll put that on the shelf. I'll get another Raptor over here so that we can do this properly. Okay, let's say I put, let's put stochastics on. They're pretty good for overbought, oversold. Stochastics, there we go. Not that you need to use stochastics. You could use, this is only for demonstration purposes. All right, so here we have stochastics, and I can't seem to make the window bigger. Okay, whatever. So when we have a very broad cloud, here we go. Oh, here, this is better. When the cloud gets to be very wide, it shows you an overbought or oversold condition. So you can see here stochastics became very overbought. Down here when the cloud, well, that one's not quite as wide. This is a better example. You get the point. Let me see if I can find you one more. That's a little better. You can see stochastics were getting very oversold as the band was getting quite wide. All right, so that's the only reason I put stochastics on there, to show you that when your band becomes very wide, you're encountering a market that is overbought or oversold. The whole idea behind the oscillators is that the market will try to normalize, but you know, the market can remain overbought or oversold for a very long time. You saw stochastics say the market was oversold way back here, and yet look at how much further the market went down. So what's the tip-off? How do you know that the market will try to make a reversal? Well, two things. First off, you're going to see a retest and a failure. You're going to see a retest of the lows, in this case the lows because we're in a downtrend. You're going to see a retest of the lows, and then the market's going to reverse and head the other way, and you're going to produce a buy signal. That is a soft edge buy. That tells you there's a really good probability here that the market's going to try to get at least to the hard edge. Now with the soft edge buy, a lot of times the market will go much further than that as well. So there's the soft edge buy on that one. Now let's take a look at the market going the other way, and we encounter a band that is quite overbought. Okay, so now it's overbought. We're looking for a possible failure and maybe a reversal. Now we're not going to go crazy, right? We're not going to start selling every sell signal. This is a counter trend signal, so you want to be careful. In fact, before we leave this one entirely, see, the other thing you could do is maybe draw a trend line across the highs here. And just to show yourself, oh, okay, it does look like we're getting a little bit of a trend change. We don't want to go crazy buying or selling into uptrends, strong uptrends, or buying into strong downtrends. That could be a no-no. So here we have another strong trend. We'll adjust the trend line a little bit here. And again, these are only guides, right? Don't get too caught up on drawing the perfect trend line. Oops, sorry, went a little bit too far. People, when I show people this, they always fret that, well, I don't draw my trend lines as good as you. Listen, folks, to draw a trend line, you draw it across the lows, you draw it across the highs. There are a dozen trend lines on a chart. This is a valid trend line. 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 They are all valid until they break, and then you look to the next area where the market might recover. All right, these are only tools to give you clues as to what the market might be doing or where the buyers or sellers may be actively getting involved in the market. Okay, so now back to the soft edge. In this case, we're going to look for a soft edge sell because we're in an uptrending market. And the first clue is that the market is starting to unwind. The buyers are going to start losing their grip on the market. And we're looking for this telltale swing point. So let's see what happens here. So the market starts to, it came up here, it retested again. Now this isn't the ideal shape. I'll see if I can find you one that's a little bit more textbook. But here we come, and now we've had a sell signal. This is a soft edge sell right here. This little guy right there. Is this one worth trying? Well, probably. The nice thing about the soft edge sell is that normally we get to cover the trade pretty tight, right? This is the attractive part of the trade. If we choose to short it here, well, we can place our stops right here. They're not all that far away, unlike my example this morning. Usually these things develop in a tight little pattern, which allows you to frame your trade a little bit tighter if you choose to go in with just the onesie, which is often a good idea with a counter trend signal. If the trade doesn't work out, it's not going to cost you a lot of money. Again, the initial objective is the hard edge. So here we go, the market comes in and boom, hit the profit objective. Okay, so there's a little soft edge sell. The ideal soft edge sell would have had a little itty bitty test of the high of this little swing right there. And it may have only been 1 bar higher, but it's always this test of the extreme pattern that we're on the lookout for. Whether it's a more extended one or a fast little one, that tells us that the market might start to unwind, at least for the short term, if not even a larger move. So here's the NASDAQ, or pardon me, the YM now with the soft edge buy. And again, that's not textbook. I said I was going to find you one that looked a little better. This isn't bad. It still doesn't unwind quite as quickly as I would like. Here, when I find you one that is more ideal, you'll know exactly what I'm talking about. And I don't know why the market's not giving me a decent signal. Okay, we're going to pretend for a moment that this bar actually made a low like that, where it actually came down below the low of the bar next to it. We would have our up, we would have our retest, we would have our failure, and we're going to pretend that this signal actually developed right here. That would be a more ideal type setup. But like I said, for whatever reason, the market's not doing that for us this morning. We'll go here back now to our NQ trade, which we're still sweating. And like I say, it's very much a counter trend signal. This was our first signal. And we had the failure, right? We had the market come down. Oh, actually, here's a good one. Here's a quick little reset, a quick little failure. There's the soft edge buy. Right there. That would have been a decent soft edge buy signal. Now, unfortunately, because of the market open, it took a little bit of a sideways path. Unfortunately for me, my stop was maybe a tick or two too tight. I looked at this signal here, which originated just out of the open, but the idea was the same, where the market has come down, it's come up, it's come down, it's failing to resume the downtrend, and now here it comes with a buy signal. Right? This was the soft edge buy. There's every reason to expect it to retreat here to the hard edge. That's our first objective. I know it doesn't look like much, but very often these things will expand even further. So that's why I tried to buy it here, and I put my stops down below the low. So I placed my stops wherever they were, right about there. And the market brought us in, did a little reversal, tapped me out, and then came right back with another signal in more or less the same place. Here is, again, the soft edge buy, and it's really just this price structure that we're really focusing on, and then the signal gives us the all clear that the market is going to maybe try to change direction. And here we are plodding away. So I hope that makes sense. Don't get too caught up looking for counter trend signals. Your objective is to find, more often than not, with trend signals. But when you have an overextended cloud and you get that telltale failure, that test of the extreme, and then the market produces a counter trend signal, very often it's worth a go. Okay, I think I'm going to move into parabolics now. Yeah, Bob makes a comment here in a question. Bob says, there are so many good trend signals, why take the risk of a counter trend? Of course, there is the bottom, etc., but the counter trends are usually really risky. Any thoughts? Yes, the counter trend trades do tend to be riskier, but okay, you really need to take the whole market context into consideration, right? I see traders, you know, like I like my charts a little bit more horizontal so that I can look back into the chart and I can see what prices have been doing. I see traders, I see traders all the time with their charts looking like, where's this one I can mess with? I see traders all the time stacking their charts and their charts look like this, right? And you've probably seen it too. And I'm not knocking it, you know, to each their own, but they'll have a whole screen full of charts that are like that, just one stack next to the next to the next. I don't understand how you can trade that. I don't understand how you can look at that chart and make any sense out of the signal that you're seeing. Okay, so you're getting a signal here. Is that okay, it's obviously a buy signal, but how do I know whether it's a good buy signal? To me, I need to have some context. I need to look at the chart and say, okay, there's a rather substantial opening gap, pardon me, above the market. Is the market going to get into that gap? Well, really, that's anybody's guess. If the market shows me a bottom, shows me that it's trying to bottom out, in that we're retesting the lows and failing to resume the downtrend, if we're breaking swing highs, then I think there's a very good chance that we will try to get into that gap. That's what we saw this morning. So I think if you look at, you know, the whole chart and try to step back a little bit and gain perspective, a counter trend trade doesn't necessarily need to be a high risk probability. Now, of course, there are times when the market has no context, where you're looking at it and it's like this, you know, it's just a big sideways mess. Well, I suppose you could consider it like a big range, and maybe if you got a counter trend buy signal here, you may think, well, maybe it's going to get up to the top end of the trading range. In this kind of situation, if you're going to try a counter trend trade, because technically our bands are bearish, so if you're looking for a buy signal and you're going to try it, let's say you're looking at this buy signal right here. It's not a signal, but we're just pretending now. Let's say you've looked at the market like this and you say, ugh, what a mess. It's going sideways. Oh, well, wait a minute. We're getting a little bit of a buy signal. We seem to be holding on the lows. Maybe I'll throw a onesie in there and see if we can't get up toward the top end of this trading range. It's not a bad plan. It's off of, well, I suppose you could justify it. You could say there's been a little bit of a retest here. It's an all yellow signal, which is not my ideal. but at least you can keep the risk tight, right? You can place your entry here, you can place your stop loss right down there. This type of signal, given the market context, that the market is drifting terribly sideways, might be one that I would do with just a single. If it works, it works. If it doesn't, okay, you got hit for whatever it is, $100. You know, it's not the end of the world. But I think there's a lot to be gained by stepping back and getting a larger perspective on the market. Ed Sequoia, apparently, and I don't know this for sure, I've never met the man, but apparently what he'll do is he'll open up a chart, I'm assuming he does it on his computer, and then he'll go stand on the other side of the room and look at his chart. That's the kind of perspective he wants. Yeah, and Bob is pretty much agreeing with what I said there. He says he's also a big one on using a horizontal chart. You need to see the market sentiment and the market context. And I think this is an important point here too. Bob says it's a matter of preference, so I stay away from the counter trend. Right now, I consider this a new event and a trend up. And that's very important. You know, it's so easy to beat yourself up. It's so easy to look at this and say, doggone it, why didn't I buy in when I had the signal, when I had the chance? Well, really, you know, you have other opportunities. We did get the cloud crossover here. If you're following the Raptor, we had comparable signals on our other tools as well. But we have a cloud crossover signal right here. So the market continues higher. We had a hard edge bounce right here. The market continues higher. And even if you miss the whole move, Bob's right. Like, this is a new context. We are now in an uptrend. We can make a good case that the market is, for today, in a little bit more of an uptrend. This may well be the move of the day. If it is, so what? Monday is another day, and, you know, what do they say? Live to fight another day. Don't beat yourself up. You guys have seen me in the room. I'm not just here on my soapbox talking down to anybody. You guys have seen me in the room with a runaway market sitting on my hands. It happens. It happens a lot. So if you miss a move, you miss a move. Whatever. Marlene asks, is the cloud crossover only when the bands cross over? Yes. So what we're anticipating for you Raptor traders, when your clouds cross like this, and here I should bring over the N or the YM because the NQ is a little cluttered with the trade on there. Okay, so here's the, or you know what, I can actually do this, can't I? Because the NQ gave us pretty much a textbook cloud crossover today. So as your clouds cross, we expect the market to retreat into the cloud and for the cloud to now offer support to the trend change. This signifies a trend change right here where the clouds are crossing over. Now, depending on how aggressive you want to be, in this particular instance, we had a couple of opportunities. We had a very quick little cloud crossover here with the market coming down, finding some support, coming out with a signal right here. We had another one which it was a little bit more extended with the signal producing right here. But the principle is the same. The clouds cross, the market drifts into the cloud, it comes out, it produces a signal. Oh, actually, I guess we had one more right here. Again, the principle remains exactly the same. You're looking at a shift in momentum. Let's look at the other direction. So the cloud crosses, the market drifts into the cloud. We're looking for the cloud to support the market now. The signal produced a little bit late. Ideally, it would have produced a little bit earlier, right here, or maybe even right here. But at any rate, still a good quality signal, still enough room to profit. Now here's a cloud crossover. You might be looking at that one and saying, well, why didn't that one work out? Again, look at the context. Look at what preceded it. For the last 5 hours, the market has been moving sideways. Why would you think that this move now is going to be the breakout move? There's really no reason to expect this signal to be the breakout. It may well be a breakout, but hey, looking at it at this point, there's nothing to tell you that. And you can do this exercise on your own. Just scroll back through your chart, take a look at where the trends have changed. See here, the clouds tried to cross, but we didn't get a complete crossover yet, did we? The bands still remained bearish. Here the clouds crossed, the market retreated into the cloud, came out, produced a signal. I'll just do one more, and here the clouds crossed, market retreated into the cloud, you produced a signal. Yes, you took a little bit of heat on this trade, and in all honesty, I probably would have been stopped. I probably would have started with my initial stop somewhere down here. I probably would have allowed it to drift. I would have counted my lucky stars when the market reversed here, and I'm thinking I'm in the clear, only to watch it come back and smack me once more before moving a little bit higher. This was a very extended cloud crossover. This would not have been easy to capture, that move. But the signal is still a cloud crossover. It is still a valid signal. It's going to happen sometimes, folks. Here's another cloud crossover. The clouds cross over, the market goes into the cloud, comes out, produces a signal. Here is an example like what we're looking at this morning, where we have, depending how you want to interpret it, you may have considered this your cloud crossover, this your cloud crossover, or this your cloud crossover signal. All three, you can make a case for all three. I would probably have considered this one my cloud crossover. Nobody ever accused me of being too quick on anything. Here's a cloud crossover. This one not quite as obvious as it's building, but again, if you take a look at the context, what do you see? What do you see here? Class? Yeah, very good, Bob. Bob says we've got a failed down move. And we have, right? Oops, sorry, wrong tool. We've got a market that's obviously been in a downtrend. We're looking at several retests of the low, several failures of the market to recapture the downtrend. We even have a little bit perhaps of an uptrend, and we've breached significant swing highs. So a lot of indications here suggesting that, hey, the market's going to owe us another move up. So there's a fairly decent cloud crossover signal. All right, looks like we got tagged here on our rally, which turned out to be a pretty significant run up. Hooray for us. Okay, a couple of great questions here. Just hold on one second. So Marlene asks, and now that the bands are wide, would you look for a reversal? Well, only if you're absolutely correct that the bands are wide. If Jim was in the room this morning, I have a feeling he's still fighting his computer virus. But if he were in the room this morning, yeah, he would be looking for the market to normalize here. The tip-off, remember, Marlene, is that failure. If we get the failure on the high and we come back with a sell signal, then yeah, that would be a soft edge sell. And we would anticipate the market to recover to the hard edge. But until we get that failure, there's no soft edge sell. Now, I'll be honest, when the market is paying off in one direction, I tend not to trade the other way. So we've seen a very strong move to the upside this morning. I'm not all that comfortable with trying to short a strong uptrending market. Now, does that mean the market can't make a full-blown reversal and get all the way back down to the lows, which were where, around 44.40? Yeah. Does that mean the market cannot reverse and get all the way back down to 44.40? No, of course not. The market could easily reverse, and just as easily as it went up, it could easily come down and slide all the way down to 44.40. I would not be very comfortable with it, but if we produced a signal, I might throw a single order on it. But for me at this stage, you know, I'm much more interested in buying opportunities, I think. But we'll see. We'll see if it produces a signal here. I think I would be, my day would be done at this point. If I caught a nice little ride like that, I think that would be a nice way to go into the weekend. No point in, you know, keep chipping away at my orders and lose all my earnings, or perhaps even worse, go into the weekend with a loss. That would make me very grumpy. Okay, Mo asks, Eric, when you do your personal trading, do you have a specific time in which you trade? Is it between these hours or later on? Normally it's the morning session that I prefer. I'm really not an early riser. I'm only here for you guys. I usually drift into my office around 7 a.m. my time, and I'll fire up the computer, see if there's anything interesting going on, go get, you know, a cup of coffee, come back, take a look, and then I'll get a little bit more serious. So normally I let opening range expire, and then I'll get down, look at taking a couple of trades. If nothing significant seems to happen in the morning, I will take a look at the market in the afternoon. But by and large, I try to stick to a trading quota where I'm only looking for 2 or 3 opportunities throughout the day. I also do end of day stuff. People always ask me, well, Eric, how can you know, make money when you're in the room here with us? Well, Adam compensates me for being in the room. That's one thing. And I also do end of day trades where, you know, I'll hold overnight. I'll look at other markets, currencies and whatnot. So Thank you for your concern, but I'm doing okay. But yeah, I believe the morning session to be the best time of the day to trade. And like I said, if the morning is flat, then you can usually anticipate something to come out of the afternoon session. All right, we are getting something resembling a failure here. We don't have the signal just yet, but notice the market is struggling with the high. I'm not going to pop in an order yet, but we will try this if we produce a sell signal. I'm just going to go in with a onesie. Stops will go above the swing high, of course. Every once in a while when we're in the room, if I see something especially promising, I will throw in a live trade as well. But usually when I'm in the room, I'm just concentrating on showing you how the system works, getting you guys better at using your tools. All right, so we're seeing a little bit of a drift lower now. Is the hawk produced anything yet? No, we've got a couple macro pullback signals. The falcon trying to maybe give us a little bit of a trend change here. And the raptor holding tough also at the moment. Oh, good for you, Tony. Tony says he's able to scalp 3 contracts and let 1 run out. So that's great. You know, when you do have those days when the market does make a rather extended move, it's nice to be able to have that runner in play. Sure, Bob. Bob asked, can you go over the trade forecaster and the day ranger a little bit more on the NASDAQ? Absolutely. Bob says, I'm looking for clarity on the forecaster the most and confused on what the forecaster considers a ranging market. All right, let's start with the trade forecaster then. So the trade forecaster is a tool that tries to tell you what the current market condition is and what the next market condition is most likely to be. So right now we're finishing scalp mode. I don't know exactly when this came into scalp mode, but we're only in scalp mode for about another 10 minutes, after which time it says we're going to be moving into trend mode. Now, before I get too far along, for those of you who are new to using your trade forecaster, it's very important that you set your market open time. I think by default it's set at Central. I'm Pacific time, so I have to set it relative to my computer. Alternatively, you can adjust your computer's clock to be on the same open as the market, but it's usually just easier to set it to your local time. That's going to make a difference as to how your trade forecaster plots. The trade forecaster works in much the same way as a weather forecaster does. The trade forecaster looks back into the history of the chart and it analyzes certain market conditions, and it says the last time these market conditions were present, this is what happened. Oh, you know, a weatherman does the same thing. A weatherman looks at the current market conditions and they look back into history and they say, okay, last time the barometric pressure was like this and the wind speed was like that and the cloud formations were like this and the humidity was like that. This is what the weather was. Exactly the same thing with the trade forecaster. Does that mean that sometimes the trade forecaster will get it wrong? Yeah, sometimes it will get it wrong. But usually the best thing to do, best way to use the trade forecaster is sometimes in how you want to manage your trade or how you want to manage your profit targets. So now that we're in full-on scalp mode, that doesn't necessarily mean that the only tool I'm going to be looking at is the hawk scalper. Oh, here we got our sell signal. We're a little bit behind, but we'll throw it in there and just demo it. All right, so we're looking for a little bit of a move now to the hard edge. We may only get here to the trend line. We'll see. And you can see I was a little bit late, but yes, this is a soft edge sell. Okay, sorry. Now that we are in scalp mode, what that means to us is that the market is going to introduce probably some more choppiness. Not that we necessarily need to go to the hawk scalper to trade, but that the profit targets are likely to be smaller. The swings are likely to be a little bit more pronounced. Therefore, we may want to have a wider stop on our trades. Let's say we're looking at this macro pullback signal and the trade forecaster says we're in scalp mode. Well, okay, that tells me that my profit target should not be very far away. And it tells me that my stop loss probably should be very far away. So in order to ride out scalp mode, maybe I need my stop down here. Maybe I need my profit target right there. Oops, sorry, let's try this again. Maybe I need my stop down here. Maybe I need my profit target right here in order to deal with scalp mode, because there's very little structure here, right? If there were a more intermediate swing, I could use that. But the scalp mode tells me shorter profit objectives, more choppiness, therefore probably wider stops. Trend mode, on the other hand, tells me the exact opposite. Trend mode tells me the market is likely to be more fluid, the pullbacks are likely to be smaller, and the profit targets are likely to be extended. So again, I can't say for sure because I wasn't watching the trade forecaster when this was unfolding. But there's a pretty good chance that we were moving into trend mode around this period. How can I tell? We'll take a look at the pullbacks. Like the pullbacks are starting to get a little bit smaller, right? And then of course we had the exceptional follow through. So if you're following the trade forecaster and you're looking at, say, this first micro macro cross signal, while the trade forecaster is saying we're in trend mode, all right, well, this might be an opportunity now to let's maybe expand our profit objective. Let's maybe put a runner in play. We could probably go with a slightly tighter stop. Maybe instead of running my stop a little bit deeper, I'll just run it below this swing low. Right? That's what trend mode tells me, is that I can extend my profit objective rather than have my traditional $50 target. Maybe I'm going to double it and go for a $100 profit on the trade. And I can keep my stops a little bit tighter so that maybe I can go in with additional contracts without having to risk more money. And then you get the nice little bit of follow through and hopefully a little bit more profit as well. Swing mode, of course, is a blending of the two. You're going to get average follow through on a trade. You're going to get average pullback or average noise as the market flounders around a little bit. All right, so that's the best way to look at the trade forecaster. Before I get into the day ranger, Joe asks, I'm laughing because Tony says if I had your money, I'd burn mine. Joe asks, what indicator makes the candles different sizes? That is the day rangers up here. We'll go to here. That is your indicator warehouse dynamic equivolume bars. Now, and once it's loaded, you're going to find it here in your chart style along with your traditional charts. The nice thing about the dynamic equivolume bars is it will plot the equivolume on any type of chart. Traditionally, equivolume bars only print on candlestick or time charts. But with the dynamic equivolume bars, you can print it on mean Renko bars, regular Renkos, really anything. Anything but a volume bar, because of course a volume bar prints the same volume for each bar. The dynamic equivolume bars print different widths for different volume associated with each bar. Okay, so let's take a look now at the Day Ranger. The Day Ranger was developed by Omar El-Tuki. He was the Forex guy for Indicator Warehouse, and he really liked to track the daily range of the market. In his way of thinking, if the market is getting toward its daily range limits, it's going to start moving sideways. And there's a lot of logic in that. I like to use the Day Ranger as profit for helping to set profit targets as well as stop losses, and to see what kind of range we're in, whether the market's expanding or contracting. So you can see the average 30-day range 209, 10-day range 173, 5-day range 185. So it seems like the market is more or less steady. It's neither expanding nor contracting. Today's range 177, yesterday's range 156. So today definitely a more active day than what we saw yesterday. Since today's range is already at 177 and the average seems to be hovering around that point, around anywhere from 180 to 200, we may have seen the market max out on the day. We may end up getting closer to 200 for the range of the day. We'll see. After which time we would anticipate that the market's going to just start into a sideways drift. Or at least if this advance continues, that the advance would seriously slow down as it gets to that upper region of what the average daily range is likely to be. The other way of using the Day Ranger is for setting profit objectives and stop losses. So let's say for easy math our average range is around 200 ticks. And let's say you wanted to take 20% of that as your profit target today. So that means you would run a 40-tick stop loss, a 40-tick profit target. So let's put in our 40-tick target. And we're going to enter here, and we're going to do our first micro macro cross. There's your 40-tick target. The market goes up, boom, you've got your 20% of your range today. You're a happy camper, and you go do something else. You can also use it for using stop losses. Let's say you wanted to offer up 10% of the daily range as a stop loss. Well, that would mean that you're going to run a 20-tick stop loss. And fortunately, we do have the fixed tick strategy, so you can, I'm not entirely sure why we have the open and close in here. Traditionally, we run our stops off the high and the low, but at any rate, you could run it 20 ticks off of the low if you wanted. That could be your stop loss, taking into consideration the average range of the market. If the market is making smaller ranges, let's say the market is only moving around 150 ticks, well, then you could probably get by with a tighter stop loss, and certainly you would need a tighter profit target. So if your daily range is 150 ticks and you wanted 20% of that range, well, your profit objective would be only 30 ticks. So that's how we use those tools. And you can see now we've exceeded yesterday's range, the 5-day average and the 10-day average. That's why these numbers here are in red. And today's range at 186 right now, closing in on the 30-day average of 209. All right, let's get back here now to the Raptor and see how this soft edge sell worked out. And you can see it didn't work out all that well, did it? And again, it has a little bit to do with context. You know, we had a very strong move to the upside. The market was paying off to the upside. As such, I'm reluctant to take a counter trend position, and you can see why. Actually, we had no chance to adjust that trade, really. So short of, you know, managing your stops very tight on the way down, I suppose this bar right here or the next bar was the only chance you had to adjust your stops significantly. You will see the markets never turn on a dime, right? So you will, I'm always hesitant pointing out counter trend signals because I don't want you looking really hard at counter trend trades. Why? Because the market is always giving you counter trend signals. Always, always, always. Now I'm not going to find a good example. See, there's always counter trend signals flashing. There's counter trend signals here and here and here. Well, this one actually worked out, but that's different. You know, there's sell signals in uptrends. There's buy signals in downtrends. I don't want you looking really hard at counter trend signals. When the market is getting ready to reverse, it will let you know. Usually, the reversals look like this. In an uptrend, the market goes up. It's going to drift a little bit sideways. It's going to struggle. This is where we're going to see our retest, our test of the extreme, and then it's going to move lower. And then as the market moves lower, guess what? We're going to see a sideways struggle and then the test of the extreme and the market move higher. So you don't want to be flip-flopping all the time. Once the market has settled on a direction, it's more or less going to stay with that direction. Yeah, like Mo says, counter trend signals get your gains back, or give your gains back, I think is what you're trying to say there. And it's so true. You know, we had a nice little run up here. Yes, you know, technically this is a soft edge sell. No question. Technically, it is a soft edge sell. But is that really enough sideways drift to eliminate all the buyers out of this market? Really? Given that the market has rallied practically from the open, do you really think the buyers are going to walk away from the market for a little 5-minute pause in the action? No. No. There's no, you know, as far as the textbook is concerned, yeah, that's a soft edge sell. And for those of you who are going to write me later today, ask me why that didn't work out, I'm going to save you a bunch of typing and save me a bunch of typing. The market is in an uptrend, right? Look at the context. We had a little sideways drift. Yes, we had a quick little test of the extreme. Yes, we had a sell signal, but it didn't follow through. Why? Well, because the market is in an uptrend. The buyers took a breather. They only took a moment to themselves there. Grab a quick coffee and that's that. Now, what happens if the market starts to do one of these? You see the difference? You see what's starting to develop here? We're starting to get maybe a little bit more of a sideways drift. And then if somewhere through here we get a quick little test of the extreme and a sell signal, okay, that could be a little bit different because we're looking at a market that is starting to flatten out a little bit. But we certainly don't have that right here. If anything, we have a market that is in a pretty strong uptrend. But it was worth showing anyhow, right? That's why we're in the room, so that we can do these things. Bob asks, so the stop loss would be percent as well? Sorry, missed that part. Yeah, in regards to the day ranger, you can use it for your profit objectives. And I'm only using 20% as an example. Right? You may choose to try to take 50% out of the market's daily range. But if the market is, when you open up your chart, and let's say the average daily range is 200 ticks, and we're already trading at 150 ticks, well, that pretty much leaves you with about a 50 tick gain. So maybe, 20% of the daily range, another 40 ticks would be a reasonable target. And regarding your stop loss, yes, the same thing. If it looks like the average range is going to be around 200, and let's say you wanted to offer 10 or 15% as a stop loss, well, that means you'd be running a 20 or 30 tick stop. Obviously, as the daily range increases, the market volatility increases as well. Okay, so they are starting to slow a little, which is to be expected. We've had a couple very strong moves up this morning. So we've breached the high here, right? There's move number one, a little bit of a retest. We're working on move number two now. After here, I guess the next stop would be Thursday's highs, which were just shy of 4,500. So we're at 4,490, 4,500 right here. Yeah, it'd be interesting. It'd be very interesting to see whether or not the NQ can rally up that high today. One thing that I found with the NASDAQ, anytime I try a significant short, usually an end of day short against the NQ, I might get 1 out of 4. The NQ is a tough nut to short. And one of the commentaries I'll read from time to time, I swear the fellow is a permanent bear. And so I have to be careful that I don't let his opinion influence mine too much. Oh, okay. Is anybody else having audio problems? Jim joined the room and... No, okay. Hold on a second here. I'm just going to write Jim. let him know. Poor guy. I hate it when the computers catch a virus. I had a little virus warning this morning when I logged on, and I thought, oh no, what now? Okay, so let's see. I'm not sure we're going to see much more out of the day. We've, like I said, at least according to the day ranger, we pretty much tapped our range. I don't think we're going to see the sellers put a serious downside move on the market. They may end up drifting the market sideways. Okay, Ryman asks, Eric, do you know why my trade manager quantity is grayed out? I cannot add more quantity. All right, so here, let's go to a trade manager. So this up here is grayed out, is it? That is odd. Try going to manual mode. So unless they've made a new little change that I'm not aware of, try changing your risk mode to manual mode and see if that doesn't allow you to adjust the quantity. Good morning, Jim. Yeah, we'll see you, Bob. I think we're going to wrap things up here. Okay, good. I'm glad that worked, Ryman. Yeah, Bob says, yep, he thinks the market's done given it's Friday. I agree. Oh, way to go, Jim. Jim says he had 5 trades on crude today, up 46 ticks. Nicely done. That's a great way to go into the weekend. We had caught a pretty nice run here on the NASDAQ, I'm happy to say. And I think that's probably a good way to finish the day. No point in trying to lose more money. All right, you guys, have yourselves a wonderful weekend, and I'll catch up with you again on Monday. We'll talk to you then. Bye for now.